Markets influenced by multiple factors. The major ones are economic, financial, political factors. News can change a market situation in a moment. If the news is positive, currency rates or stock prices usually go up. If the news is negative, they go down. So, which news should a trader follow? The first point of interest is economic news. These are publications of various economic reports and statistics, such as gross domestic product, unemployment, inflation or interest rates, retail sales, and other data. Financial news, represented by financial reports from companies, largely affect stock prices. If financial figures are better than the forecast, a company's share price usually goes up. If a company's financial figures are worse than the forecast, its shares decrease in value. A country's health is affected by political events. Elections, revolutions, impeachments, death of political leaders, and other events that may cause political instability, so it's important to follow political news. Some unexpected events, such as terrorist attacks or natural disasters, like earthquakes, tsunamis, or droughts, influence markets too. Keep in mind that the market's reaction to a news release usually lasts from 30 minutes up to 2 hours, but sometimes it can last for 3 to 4 days. You can follow our smart news feed that accumulates news from multiple sources in the market analysis section on the left-hand side panel. In order not to miss the most important releases, scan an economic calendar. On our platform, the economic calendars are located in the market analysis section on the left-hand side panel. A detailed instruction on how to use economic calendars is available in the How to Read Economic Calendars video. We wish you a pleasant trading experience.